This conference will now be recorded.
What I want to do is to go back over the basics with you, realizing everything that we do in accounting comes from this accounting equation: assets equal liabilities plus stockholders' equity. Stockholders' equity equal common stock plus retained earnings. Retained earnings is revenues minus expenses minus dividends. We have a double entry system where when we have a financial transaction, we receive something, that's a debit, is always on the left side. We give something up, that's a credit, that's always on the right side. So for any transaction, there are two parts of it: what we received and what we gave up. We have the accounting cycle. We analyze transactions, we make journal entries, we post to the ledger, we prepare a trial balance. Then we prepare the financial statements and do the closing entries. So I want to review this with you and with that problem that we have today. When we make journal entries, it's always a debit or credit. Most of these journal entries relate to cash. When cash comes in, you debit cash. And the type, it might be the issuance of stock, we're going to debit cash, credit common stock. We might receive revenue, we're going to debit cash and credit revenue. We might collect on an account receivable, we're going to debit cash and credit account receivable. We may borrow some money, we're going to debit cash and credit short-term note payable. We appear to be okay with the receipt of cash. Now, when we pay cash out, we got a credit cash. So whenever we, in transactions 7 through 10, if we purchase an asset, we got the credit cash. If we pay a liability, we got the credit cash. If we pay expenses, credit cash. If we pay dividends, we're going to credit cash. And so sometimes people have been debiting cash when they pay an expense, when they pay a dividend. So just always keep in mind, if cash is coming in, you debit it. If cash is going out, you credit it. That's about 80% of the transactions. We have two transactions: purchase of an asset utilizing debt, we debit the asset, credit the liability created. And sales on account. And most people are doing well with this. If you sell it on account, you debit account receivable and you credit sales revenue. So those are all of the transactions that we're dealing with. This is the chart of accounts. It tells you what's an asset and what its normal balance should be. So when you get into balancing out the accounts and determining what's in an account, assets typically gonna have debit balances. So you know something is wrong if your assets, the accounts over here, supplies, receivables, don't have a debit balance. Liabilities are gonna have a credit balance. So when you finish all the transactions, common stock should be credited also. Dividends should have a debit balance. Revenue should have a credit balance. Then all of these expenses should be a debit. So what I'm just telling you to pull them out or whatever, whenever you have an expense, it has a debit balance. And once we make journal entries and we post them to the ledger, let's just look at how some of these journal entries look. When we got cash in, we debited cash, credited common stock. When we had a cash sale, we debited cash and credited sales. When we collected on a receivable, we debit cash and credit account receivable. When there's a short-term loan we made, we debited cash. And so you have these. When we paid an expense, we always credited cash. When we paid a liability, we credited cash. When we paid a dividend, we credited cash. So you have the examples of every entry. You just got to choose the one it is from this set that you have. When supplies come in on credit, we buy them on credit. We debit supplies and credit accounts payable. And the other transaction, when we did the work but we didn't receive any cash, we debit account receivable and credited sales. Are there any questions about any of these transactions? Here they are listed here. Here is where we've made the journal entries to reflect it. Does anybody have any questions about any of these transactions, the type and what you should do? Speak now or forever hold your peace. Once we do that, we post to the ledger, debits and credits. We post them to the ledger. And then we prepare the trial balance, debits and credits in this order: assets, liabilities, stockholders' equity, revenues, and expenses. We always prepare it in this order, the same as it is in that chart of accounts, which you should have. Then we prepare an income statement. Revenues less expenses gives us the income. So once we get the revenue, we're always subtracting out. Then we prepare the statement of retained earnings. And it's a simple statement. The retained earnings at the beginning plus the net income less the dividends gives you the retained earnings at the end. Here's your balance sheet. Got to be in balance again. The assets have to equal liabilities plus stockholders' equity. And we said the functions of the financial statement: the balance sheet where we started, the income statement what happened, the cash flow statement what happened, then the ending balance sheet where you are. And then we had this in-class problem that we worked on. So that's our basic review. We now want to look at this accounting cycle review problem. Does everyone have this problem who's in review? Does everyone have this problem? Okay, everybody got the problem. We're going to work this problem.
No, I don't.
Okay, check your course content in Blackboard. Because if you fill this problem in today and work it out with being submitted by the end of the class period, as we're working together, you'll get 5 points. So as we're working on this problem together, if you can complete it as we work together and turn it in, then you get 5 points. As I get in a generous mood for you all, you're reviewing and you're getting paid to review.
What problem are you referring to? I'm sorry.
In the course content,
Mm-hmm.
in the accounting cycle,
Mm-hmm.
there is an accounting cycle review problem, this problem.
Okay.
You want to pull that problem up. We're going to work it together. And if you turn it in complete and correct, then you get 5 points, which will help you on your midterm.
Okay.
We don't have any help. So are we ready?
Yes.
Okay. Let's now make these 9 journal entries. Put them in here. So let's just do journal entry 1 first. So I want everybody to do journal entry 1. And we're going to see if everybody can make journal entry 1, invest the $50,000 to start the business. That's the journal entry we've been making from the first day of class.
So you want us to say it to you or actually just go in Excel and put it in?
Right here. You can just put it right here on the sheet. If you want to use Excel, that's fine. But I want you to make that journal entry.
Okay.
Because remember, you're turning in this review problem for 5 points. So what are we going to debit? What did the company get?
50,000.
Well, what's our type first?
It's a type 1.
The type 1. So what we
100 cash for 50,000.
okay?
And then wouldn't it be 400 for common stock for
Correct.
50,000 credit?
Mm-hmm. Can everybody make that transaction? Okay. Let's go to the next one. You purchase supplies on account. What type is that?
A type 12?
That's a type 12. What do we debit in a type 12?
130 for supplies?
So we're going to debit the asset that we purchased. We're debiting supplies. And what are we going to credit? If you look at transaction 12, transaction type 12, it tells you what to debit and what to credit. It says you debit the asset purchased. What does it tell you you credited? Go to journal entry type 12. You're supposed to have your types right there handy.
It'd be a liability credited.
The liability created.
It would be supplies pay? Wait,
Accounts payable.
accounts payable. I'm sorry.
Okay. What number is accounts payable?
Accounts payable is 301.
301.
Yes.
Well, our amount.
The dollar amount would be 40,000.
40,000. Okay. What's our next transaction? Pay dividends in the amount of 10,000. What type is that?
Type 10.
What do you debit in a type 10?
$455 for dividends for
And a lot of
10,000.
people,
Huh?
a lot of people, when I reviewed the quizzes, were debiting cash. So you got the type and it tells you what happened. So how much was the dividends?
10,000. And then it'll be 100 cash credit for 10,000.
So this is all we're doing, just going through, looking at what happened, getting the type, and debiting and crediting the appropriate accounts from that chart of accounts. Purchase land for $90,000, paying 10 down, and sign a note for the balance. So y'all
Okay.
work on this and tell me what should happen.
I'll tell you right now.
Tell
So
me,
for, huh?
well, tell me right now, then.
Oh, okay. So for the account number, it'll be 200 for land, and that would be debited for, it was 90,000, right? Yeah, for 90,000. And then after that, it'll be 100 cash, and that would be credited for 10,000, right? Was it 10,000? Yeah, for 10,000. And
And what
then,
type is for the cash? Let's stay on the
oh,
cash.
type 7.
So this part of the transaction is a type 7. So we bought the land for 90. So two transactions involved here, two types involved. The first one, the down payment, is a 7. The second one is what?
350 will be the account number, and then it will be for notes payable for 50,000. That'll be a type 12 under credit.
A lot of people miss this transaction over and over and over again. First of all, the debit always have to equal the credits. The debits always have to equal the credits. We bought land 90,000. That's over here. We got to have a total of 90,000 over here. We paid cash down of 10. And therefore, the note had to be 80,000. Can everybody on the sound of my voice make this journal entry now? Is there anybody who doesn't see this? Okay.
Dr. Boyd, you give extra credit for participating, because I surely am answering your questions. I'm serious. I need that. Apparently, I'm not an A student right now.
I don't know why you're not an A student.
Because I be stressed for other stuff. And this class is just like, whew.
I think knowing about money is very important. Now, I'm gonna let y'all make 5 by yourself. So you're getting 5 points, so you got to do something by yourself. So everybody make 5 by themselves. So all I'm going to put here is the type for journal entry 5. What type is it?
620. Oh, the type. Never mind.
It's 9.
Okay, it's 9. So you got a tank man. Everybody make that one themselves. Let's move on to number 6. Car rental revenue earned from corporate customers on account. So as we get to number 6, what type is it?
15.
So this is a 15. So on a 15, what does it say? That's a sale on account. What do we debit?
110 accounts receivable for 80,000, right?
I hope you got it. I'm typing out.
Yeah, I'm right. Ain't nobody else telling me I'm wrong.
And what you gonna credit?
500 for sales for 80,000.
So when we have that sale on account, and notice we always got the debit account first and the credit account second, so that's standard. And most people do well on this one. Okay, let's go on to number 7. Paid on accounts payable. What type is that?
12.
A what?
No, it's type 8.
That's a type 8. You paid a liability. It's not a 12. We paid it. So know what it says. Paid on account payable. Paid. Paid. Whenever you see paid, cash is credited. Got it? Whenever you see the word paid, that's a cash transaction, cash is credited. So we paid on the account payable this transaction here where we bought something on credit. So what are we going to debit?
301 for accounts payable for 15,000.
And what are we going to credit?
100 cash for 15,000.
Okay. So that takes care of that one. Almost finished. Collection of cash from corporate customers. So cash is coming into the business. So we know what?
It's accounts receivable.
What's coming from account receivable. But I need a type.
Type
Oh,
3,
sorry.
This is a
right?
type 3.
Yeah, it's type 3.
Okay.
Okay.
What was
So that journal entry relates back to this journal entry where we did the work, but we didn't get the cash. Now we're getting the cash.
You said it's in like for the type 15, right?
It comes after the 15. 15 is where we do the work. Okay. We don't have the cash yet, but we did the work. That's a good thing. Then later on in the 3, we get our cash later. I mean, when you work now, nobody pays you every hour you work. You work, they pay you later, 2 weeks later. So here you're running a business, you did the work, you got paid later. 15 when you do the work, 3 when you get paid later. How much cash did we collect?
70,000.
We got 70,000 of our money. So is that clear now? And we're gonna credit what?
Accounts receivable for 70,000.
So you see that we're using those transactions. Yeah. You should be using that chart, and it's basically telling you what you need to do. And what's our final one? Almost finished. We paid on the note payable, 20,000 principal and 5,000 interest. So how much money did we pay?
25.
Okay. So
20.
cash got to be credited, okay? How much did we pay?
We paid 25,000, right? Because then we're paying 20,000, and then the interest is 5,000.
If you got a student loan, you're gonna pay back what you borrowed plus interest. You got to pay back more. So a lot of people miss this. You paid 25,000. You got a credit cash for 25,000. So let's go and make this final journal entry where we paid on the principal of the note. So that's what, 350, right? Note payable. And the amount was how much?
20,000.
Then we had to pay that extra, which is interest. What account is that?
680 for interest expense, right? For 5,000.
Depending on you, since you helping me. We paid what, 5,000, correct?
Yes, yes, sir.
And so the total payment to cash is 25,000.
And that would be debited.
That would be what?
Debited.
Credit.
It's
It'd be
debited,
credited.
right?
No, because we're paying it.
You pay
Oh, I'm sorry.
Going out.
No, but I have the right concept. I'm on a roll because I'm sitting here telling you everything. So thank you, though, whoever that was.
You are. You just said it the opposite way.
Thank you for understanding. You know what I meant.
You're good. You're good. We knew what you were talking.
That's the working emerald who needs a car that drives itself.
Oh yeah, that's me.
Let's not work too much now. There's supposed to be a class, a traditional class that meets on campus. So I'm not impressed when
Yeah,
you're going
I
to
get
work my class time. But anyway, just a little side note there. Let's go on. What type is, when we pay the note payable, what type is it?
8.
Paying the liability 8. When we pay the expense, what type is it?
9.
So we have two types here. So notice that, you got the bigger amount, it has two types in it. So the types here, pay the principal, pay the interest. Can everybody make that journal entry now? Is there anybody who can't make this journal entry? Since you're gonna have it on your midterm. Or this journal entry, since you're gonna have it on your midterm. All right, let's go to step 2. Let's post these to the ledger. I'm gonna post the first one for you, then you all are posting the rest of them. So let's post this first one. If it's on the debit side in the journal, it's on the debit side in the ledger. If it's on the credit side in the journal, it's on the credit side in the ledger. So we're going to go to the ledger now, and our goal is to see, okay, how much after these transactions, how much cash you got, and how much everything else. So we're going to debit cash for how much? What was that initial amount?
$50,000.
50,000. So this is just a clerical process. We want these accounts in order. So I got common stock way down here with retained earnings in the income summary. So what I want you to do, because sometimes I don't tell you the order of the accounts on the exam or quiz, you are to post the remainder of these transactions. So you should have them. You're to post each one, putting the accounts in the order that they are on the chart of accounts. So you should have your chart of accounts. You must put those accounts in that order if you want your credit. If you get them out of order, no credit. Got it?
Got it.
And that'll be a help for you. So get these accounts. I got the first two in your cash and receivables. So your assets on your first two lines. Your liabilities would be on this line. Then common stock retained earnings income summary. Put dividends down here. So I'm putting some in for you. But you finish putting the rest of them in because that's part of the process for you to put the accounts in. Is there anybody who has a question on posting? The purpose of posting is to see how much is in each account after all of these cash transactions and everything else. You simply put it on the debit side for the account. It was a debit in the journal, and on the credit side. So do that and then get my balances. So I'm not going to do that for you. So you've got to do that and get the balance in each account. You got to earn some of this money yourself. We did the hardest thing. We made the journal entries. You do the next thing, which is posting. So I'm going to give you all about 10 minutes to get this posted. Shouldn't take you any longer than that.
Hey, Professor Boyd, I had a question dealing with the midterm. Okay. Okay.
So everything posted.
Hey, Professor Boyd, I had a question about the midterm.
Yes.
So on the first page, it says beginning account balances. Am I supposed to do something with that? Because
You put them in those T accounts.
so that's
Wasn't that the first instruction you had was the camera?
You know, you are certainly right. You are certainly right.
So
I
wait,
mean,
if
that,
we're
yeah,
if
yeah,
we're putting them in a T account, then why are we putting the other journal entries in there like to offset? Like, are we subtract? I
Kind of
don't know.
like your bank account. If you had money on there on December 31st, that money's in there on the 1st, and then everything else you start putting in there goes with that. So you just have some stuff in there in the beginning.
So we're adding that to what we have. We're adding the beginning balances to what we already like subtract like our T account balances.
Hold this
I'm
second.
confused
Hold this second.
no, for real.
because this is confusing me now. I feel like I've done everything wrong, and I'm really
This is
lost.
nothing like the past. This ain't nothing like it.
Yeah.
Professor Boy, you don't have to do us like this on this midterm. That's raggedy.
Very much ghetto. I don't understand like none of this like whatever this is because I was just like so confused with these beginning
Got me over here
balances.
failing out and shit and
I'm not
sweaty.
sure.
Yeah.
No, for real.
What are y'all saying?
Like, what do we do with the beginning balances? Because I don't have an accounts payable account for the T account, and on the beginning balances, it's
And you
telling me
have to
like it's
create it.
giving numbers.
You have to create it.
So so the cash that's at the beginning balance, what are we
Those
doing with that? Like, are we adding that to the T accounts that we've already balanced, like subtracted and all that with
they
the
should
T
be
account
your
balances?
they should be your beginning balances.
So,
Maybe
but I'm saying like they are the beginning balances, but like where are we inputting them? Because
They
I don't
should
know
be
if
the
it's
first
showing
thing
on
in the account. Those should be the first things in the account.
in the T accounts. You're saying,
Correct. In the T accounts. Okay.
but like I don't know. I don't. Professor, I like. Oh my God. I don't know. Is this supposed to go on like the debit side or the credit side, or is this supposed to go on the trial balance? Like what?
Do we have all our balances done?
Yes.
I only want the cash ones. That's the only one I'm gonna put down. So what are the debits to cash?
The debits to cash are 50,000,
Okay,
and then it's 70,000.
okay,
Do you want the credits now?
okay,
Then the credits are 10,000, and then the next one's 10,000.
so it's two 10,000s.
Well, really, there's three 10,000s.
Okay,
And then the next one is 15,000. And then the next one's 25,000.
is that everything?
Yes.
What are the total debits?
The total for debits is 120,000.
What's the total for credits?
70,000.
So what's our balance in the cash?
It would be it would be a debit of 50,000.
So cash has a debit of 50,000.
Mhm.
Are there any questions on that? Okay, so you should have gone on and posted the rest of those accounts.
I have a question. Why is it considered debit? Like the total balance, why is it debited?
Because that's the side of the larger.
Oh, okay. Gotcha.
Debits, credits, and you're gonna put the balance on the side of the larger.
Okay.
Just like it's like it's some weights, and
Mhm.
surely 120,000 is gonna be weighed down lower than 70,000.
Okay.
Good question.
Thank you.
Well, how much do we have in account receivable? Just ending balance now.
For account receivable, just the balance in total?
Correct.
Okay, 10,000, it would be a debit.
No,
of
just give me
10,000.
ending balances.
Oh, okay. So you're talking about just like at the top. So it would be a debit of 80,000 for the debit.
No, I just want the balance in the account now. I just want
Oh,
one number.
oh, that's what I gave you. Okay, maybe I got the wrong number then.
No, I'm just saying, okay. What were the debits in account receivable?
80,000.
Yeah,
What were the credits?
70,000.
So what's the balance?
10,000.
10,000. Did you say that?
Yeah, I said that at first, but then
Okay.
you told something else. Sorry.
That's okay. What's our next account?
Would be supplies.
What's our balance in supplies?
It would be 40,000.
What's our next account?
Would be land.
What's our balance in land?
90,000.
We have any more assets?
No.
So let's go to liabilities. Accounts payable.
The debit would be 15,000. And the credit side would be 40,000.
I just want the balance.
Oh, I'm sorry. Okay, so the balance would be a credit of 25,000.
So I'm assuming everybody else can do the other part. And the notes payable is what?
It would be a credit of 60,000.
So the balance is 60,000.
Yes.
Okay. Has all our liabilities, right?
Yes.
Stock and earned income summary we'll get to. Dividends, where we at dividends? Debit or what?
It would be a debit of 10,000.
And we'll just put our revenue here. What's our sales?
For sales, it would be a credit of 80,000.
Sales has a balance of 80,000.
Yeah.
What expenses do we have?
We have a delivery expense and an interest expense.
How much is the delivery?
A debit of 10,000.
And the interest?
It would be a credit of 5,000. I'm sorry.
Credit or debit?
It'd be a credit.
Yeah.
For number 9?
Debit. It would be a debit of 5,000.
Expenses.
Oh, my bad.
Have
I
to
wrote it
have
wrong.
balances.
Yeah, I wrote it on the wrong side. That's my fault.
You wrote on the wrong side.
I was trying to go too fast.
Oh, is that it?
Yeah, I didn't really check over it. Here. Okay, I fixed it.
Okay, let's go to trial balance. So what are we going to do in preparing this trial balance?
So you're going to take all of the final accounts total, and if it's on the debit side, then you would fill it in on the balance sheet. So, such as cash, it was a debit of 50,000, so you would write that in while keeping everything in.
And the amount of cash was debit of what?
50,000.
What was the second one?
It would be accounts receivable. It would be a debit of 10,000.
Okay, so we'll stop there. Everybody else finish up with the trial balance. What should the total be? They got it right.
I didn't do that part yet. I only got halfway through.
Okay, well, y'all finish it up and then I'll check on a total in about 5 minutes. So all you're doing is you're putting those accounts in that same order.
I have a total, Professor.
What's your total?
I ended up with 215,000.
For the debits? How much for the credits?
They equaled, so it was 215,000.
Okay, so everybody go through now and see it and tell me if this 215 is correct. So you got 5 minutes.
How the fuck did my keep turning off?
Is there anybody having trouble getting the 215,000? take about 5 minutes. All you're doing is bringing these balances that we put in here over. And seeing if they add up to 215,000. Does anybody else have 215,000? Okay, does anyone else have 215,000?
For the credits, I got 155,000.
Uh-oh. Well, let's just put them in. Cash is 50, account receivable 10, supplies 40.
I got 215,000 for both sides.
Okay. Supplies is and the land is how much?
90,000.
Then we go to what? Accounts payable. And accounts payable is going to be how much?
Credited 25,000.
And we got the notes payable. That's going to be what?
A credit of 60,000.
Oh, that's why I didn't have 215,000.
Oh, okay. Now we come up with the common stock. So how much is the common stock?
It would be a credit of 50,000.
We put our retained earnings in here. And right now it's what? 0. Drop 1 dividends. Balance in dividends.
10,000 debit.
Now, debit. I'm gonna drop one more. Sales. How much is sales?
It'd be a credit of 80,000.
And what expenses do we have?
Delivery expense and interest expense.
How much is the delivery expense?
It would be a debit of 10,000.
How much is the interest?
It would be a debit of 5,000.
So now we have the trial balance, correct?
Yes.
And what we should realize, what?
That both sides are equal?
They got the equal. Yeah, they got the equal. So that's one thing. But now we can get these financial statements prepared. So everything, see, we got it in order. Everything from here on down is going to be on what? What does this word say?
The income
An
statement.
income.
So these three accounts go on the income statement. And everything from here on up goes on the balance sheet. That's why we keep it in that order. So you should be able to easily do an income statement and a balance sheet. Correct?
Yes.
Yes.
Can y'all do this income statement quickly? Got delivery. I'll take out rent and put interest here. And everybody do a little income statement with 3 accounts. $80,000 the revenue. We got 2 expenses of so our total expenses are what, 15,000? So what's our net income gonna be? 80,000 revenue, expenses of 15. What's the net income? Don't say it all at once.
Isn't it
65,000.
right?
5,000. I don't know what's taking so long.
Trying to add it in my head, subtract it in my head.
Yeah. So we see how easy it was to do the income statement.
Mm-hmm.
So you should never have a problem with the income statement. Statement of retained earnings. Our beginning balance is what? 0, so it's a new company. Then for the net income, don't take this number and bring it down. It's gonna give us a subtotal, 65,000. Then we're gonna go back up here to the trial balance, get these dividends. And so the ending retained earnings is gonna be what?
55,000.
Okay. So what do you
5,000.
know about that ending retained earnings, if anything? Can y'all do a balance sheet? And remember, the balance sheet is what? It's all the accounts above the red line. Except now what? We now have a balance in retained earnings of what? 55,000. So all of these accounts are temporary retained earnings account. When we net them out, the balance is 55,000. So can you now do a balance sheet, put the assets on one side, liabilities, common stock, and the new retained earnings on the other side, and be balanced? Can you do the balance sheet where the total assets are going to equal total liabilities and stockholders' equity? So those numbers have to be equal. So go ahead and do your balance sheet. So we got them there. So what's our total current assets? 100,000. Then we have to pull in the land. The land was 90,000. Total long-term asset, 90,000. So we add them together, total assets are 190,000. So can you get 190,000 over here now? I'm gonna leave that for you all to do later. I'll give you all till 1:30, I guess, or so to get finish this up and get it to me. Let's look at closing entries.
I'm sorry, I got lost.
Where you lost at?
Let me backtrack. Can you go back up? So you said the current assets, hold on.
We just reached up here and got them off the trial balance.
Okay.
We
So
just
I'm
reached it.
okay.
So the 50, 10, and 40, we reached and we put them here.
Okay.
Total 100. Then we got the land. We went right up here and we got the land. That's a non-current asset. And we put that here. 90 plus 100 gives us total assets of 190.
Okay.
Any questions?
Gotcha. Thank you.
I have a
Okay.
question.
Okay.
Okay, so whenever it comes to equity, whenever we fill in equity and you have the retained earnings, since it first started off with 0 and then now it's 55, what would we put into that retained earnings part? Because I think that's the part that's like kind of confusing.
What do you think you would put there?
Wouldn't it be 55 now because
That's correct.
that's starting off with? Okay, cool. Because that's not what I was doing at first. I was just leaving it 0.
Nope, you got to put the new retained earnings in. So
Okay.
the common stock is how much? 50,000.
Yes.
And the new retained earnings was 55,000. So the new retained earnings come here. So the total stockholders' equity is 105,000. Now I'm gonna let y'all finish this off, okay? You gotta get your liabilities in. At the end of the day, they got a balance. Let's move on to closing entries, and there are 4 closing entries. The first one, we're gonna close out the revenue. So all of these accounts on the trial balance below this red thing must be closed out. So to close it out, we have to make a journal entry. So we're gonna close out the revenue first. We're gonna debit sales and credit income summary. And what's our amount in this closing entry? $80,000. So we're gonna debit sales for 80,000. We're gonna credit income summary for 80,000. And because these are journal entries, we have to post them. So we're gonna go back up here and begin to post these entries. So we're gonna put 80,000 here because we debited. And we're gonna go up here and put an income summary, the credit of 80,000. And now we see that the sales account has been closed out. Okay. Okay. I'm gonna do one more closing entry for you, then you all gonna have to do the rest of it. I'm gonna go to closing entry 3. And what are we gonna debit in closing entry 3?
It would be retained earnings and income summary.
Income summary, but we're gonna debit income summary.
Can you go over how to like tell if it would be a debit of retained earnings or not?
As long as you got net income, this is how it's gonna look.
Okay.
As long as you got net income, this is how it would look. So we go up here to the income statement. The net income was what? 65,000. So we're gonna debit income summary for 65,000. And we're gonna credit retained earnings for 65,000. Let's go post those entries. We always want to post. So we get back up here, and for the income summary, we're gonna have a debit of 65,000. And for retained earnings, we're gonna have a credit of 65,000. Okay, you've got two more closing entries to make. When you make those closing entries, this number will be how much? The retained earnings is going to be there at 55,000. We forgot about bringing comp stock down. So when you finish up, when you finish posting the other two entries, if your balance is 55,000, you've done it right. And every other account, income summary, dividend, sales, delivery, and interest expense has to look like this. They all have to be zeroed out. So you see how sales is? Income summary has to be like that. Dividends have to be like that. Delivery expense has to be like that. And interest expense after you have posted those entries. So I've done most of the work for you all for your 5 points. You all have to finish it up. Are there any questions?
Okay, well, I have another class right now. I'm supposed to be in another class. I won't be able to finish all this because I have to be in another class. Can I still submit what I do have though?
When can you submit it to me?
What do
Can
you
we
mean?
submit it by like 4? Because I'm in the same situation.
Okay. Full work for, there's
Oh,
4 work
everybody?
for everybody. Yeah, there's 4 work for everybody.
Yeah.
Yes.
Okay.
And you
That-
want us to submit on Blackboard? Do you want us to put it under like midterm or, because I don't see a review tab.
I'll put a review tab in for you.
Okay, thank you.
Okay.
Thank you.
I hope this was helpful.
It was. Thank you.
Look at me. Oh, shit.
Was he done talking?
What?
I was asking, were you done talking?
Yeah, I'm done talking. So the review,
Professor, this
go ahead and
midterm
leave.
is stressing me out.
So the review people can leave. What were you saying, Dawkins?
Professor, my midterm is like stressing me out. I'm very confused. Like you did not have to do it like that. I don't understand like why it's not doing right. Like are we
Well, it's a midterm for a student.
No, this is Ivy League A student. This is
right, that's
know
what I'm
what's
saying. This is
happening.
extra.
Not that bad, right, Josiah?
So since it's a midterm for an A student, are we gonna get like more of a curve or something since we taking an A student test than the other students?
You wouldn't go below a B. You won't go below a B.
I don't even know what that shit mean, bro. I don't even know what that means, honestly. This is my first time talking in this class. That's how I know. I don't know half the stuff you be saying. I just be going along with it.
So you still have blessings?
Yes, Dr. Boyd, I'm still here.
So how did you like the review?
It was great. I feel like it should be really helpful with their midterm exam.
So what you need to do is to follow up. So you can get in the Blackboard, and look at how they do. See
Okay.
if they complete it. I'll put a review tab in there for the review form.
Okay. And it's due at 4 p.m. for them, correct?
Correct.
Okay.
Do you know how to put an assignment in Blackboard?
No, I don't.
We'll work on that when we get to campus.
Okay, sir. I have an evening class today, so I'll probably take a look at that tonight after my class.
You got the review in Blackboard?
Yeah, it's in course content on the accounting cycle. Oh, I need to do something.